So when you look at the Dubai property market for the first time, it can be very confusing with all the different marketing and fancy adverts going around from lots of different developers, and you don't know which ones are actually credible and what is going to make you a profitable investment, because not everything does. So in this video, I'm going to give you 3 very important things to consider before purchasing an off-plan property in Dubai. Before we get started, you can get in contact with me using the details in the description. We give full detailed reports on all the developments that make sense for investment within this Dubai market. So let's start with number 1. It sounds obvious, but it's the developer reputation, track record, and the brand itself. This is arguably the most important factor when you're investing into off-plan property. You need to have confidence that the developer can deliver on their promises. This includes things like the quality of their developments, the handover times, management of their building after the handover, and the performance of their past projects within the market. Rather than relying solely on what the developer tells you, conduct your own research to ensure that they meet these standards. Some developers may advertise heavily, but may not necessarily be the best in terms of quality and actual reliability. Additionally, a developer's brand plays a significant role. Investing in a reputable developer with a strong market presence like Emaar, for example, can make it easier to resell the unit both before and after handover. Their brand and credibility attracts more attention from other investors, making the property more desirable in the secondary market, and it protects you more as an investor, because if you want to liquidate that asset before handover, there's a big pool of buyers that will be willing to purchase that property from you. At the same time, don't buy into the hype or the fear of missing out. I've seen many developers sell a lot of clients on this alone, but only invest if the numbers make sense. Number 2, the location and future growth potential. The location of any property is one of the most important factors in determining its long-term value and its rental yield. When you consider investing into off-plan properties, consider not just the current appeal of the location, but the actual future growth potential that that area has. The proximity to key areas such as Marina, downtown, or business districts like DIFC also plays a major role in attracting tenants, buyers, and the commute times to work are much more attractive. Planned infrastructure developments such as new metro lines will shorten the commute. Schools and malls can also significantly boost the value of your property investment. It's important to look into the actual government plans for expansion within these areas as well. Emerging locations often offer better growth prospects compared to fully developed areas, and investing early can lead to substantial capital appreciation as the neighborhood and surrounding area develops. To give you an example of investing early into an area, I had a client who bought into one of the very first phases of a development called Damac Lagoons. The benefit of him investing into the phase 1 of that project is that the developer increased the price on each phase that they released and subsequently increased the value of his unit. In this case, rather than relying on the secondary market and external buyers to drive the value upwards of his property, the developer did it for him. This has been replicated many times with other locations in Dubai. It's definitely something to consider if you're investing into the final phase of a location. Does it still have the growth appeal for the future? Some yes, and some not so much, because the developer has increased the price so much to the point where there's so many other buyers in the market that have bought in at a lower price, and they can undercut you when it comes to resale and obviously decrease the returns that you will make. Number 3, using payment plans and the pricing of the unit. Do not just invest into an off-plan project because the payment plan is attractive and easy to pay for. The numbers have to make sense before investing into the project. Certain developers in this market will make extremely attractive payment plans, but also charge a big premium for it and increase the price of the actual unit, meaning that the numbers on the project don't make sense for investment. Just because it's easy to afford, it doesn't mean that it's a good investment. Payment plans can offer great leverage for investors, especially if your strategy is to flip the property on handover or just before. and only part ways with limited capital, or using, for example, a post-handover payment plan where the tenants can cover a significant portion of the property's value as you get the keys, and then the property rents out and they pay towards the payment plan on the property, meaning that you're only parting ways with limited capital. This obviously maximizes the return on your investment, because once the post handover payment plan is paid, the return on your investment is much higher. If a payment plan is 30/70, for example, you're only putting in 30% during the whole construction process, and then on handover you're paying 70%. If you flip on handover and the property is worth 30% more, your return on equity is 100% rather than just the 30% increase, because you've only parted ways with 30% in the first place. If this is your strategy, it's important to understand the numbers and the projected exit strategies, which we can put together for you using a detailed report with comparable evidence. And the final point, before you invest into the off-plan property market in Dubai, you must have a strategy in mind as to what your aims are from the investment. I always make sure my clients understand what they are investing into and what their strategy is before they invest. For example, if your plan is to maximize rental yields and build out a portfolio of properties that pay you every month passively, then this can be a completely different product to something that is going to give you capital appreciation during the construction period, and then you want to flip the property. Depending on what your strategy is, it will determine the type of property that you should be investing into. So it's important to understand what you want out of the investment, and then you can align the property to match that. If you are considering investing into the Dubai property market, then drop me a message today using the link in the description, and we can give you full detailed reports on the best areas and projects to invest into depending on your strategy.